Happy Friday. Welcome back to the final hour. It is October 4th. We are live. Final hour of the trading day, final hour of the week. Not a bad week overall. How was your week? I had some nice little wins this week. The little daily profit play, 11 of 12. Couple extra bonus trades on the SPY. Little win on a Nike with earnings this week. And markets really didn't have to do anything. Here's the market. Monday down and up for that late day volatility. Tuesday falls aggressively. Wednesday chop. Thursday chop. Today chop. Even with non-farm payroll, the market got all excited there for a second, gapped higher in a big way. Pre-market opened up, faded, tried to fill the gap. We bounced off that level, and this is a nice little look at price action for the day. So all we saw was a rally up, fall back down, coming in to fill that gap. Nice little support level around 568 on the SPY. Goes up a couple of bucks here, 568 up to 571 and change. So a couple dollars of directional movement there. But overall, fairly contained. I'm still watching. I dragged this yellow box out on the SPX. Just zooming out for a moment. Let me go to the higher time frame. I mean, this is a pretty simple way to look at the market right now. Nothing crazy is disrupting it. The longshoreman strike has been resolved, or at least been pushed back to January. Oil prices are still up with escalated tensions in the Middle East. We're not making highs, we're not making lows. We're still dealing with a lot of indecision right now. Could be the same for the next couple of weeks. The big data point next week that we'll be watching will be Thursday for CPI for the U.S. I talked about this all morning, but I think that the U.S. is now. It's silly to have like one news announcement that changes the entire perspective on employment, but we don't really have to worry about it now until November. I mean, we'll have unemployment claims every week, but they've been pretty steady. So if we have non-farm payroll again in November, really all eyes are on inflation, which will be coming out on Thursday. So for next week's calendar, let's go next week's calendar. I see a lot of low impact Monday. I see a lot of low impact Tuesday. We got an RBNZ cash rate decision on Tuesday, looking to cut by 50 basis points for the RBNZ. Okay. They slashed 25 basis points, looking to slash another 50 basis points. That's Tuesday night, 9 p.m. Eastern time. FOMC median minutes on Wednesday the 9th. Get the Fed's assessment for where things are at. Tuesday is our CPI data. We have core CPI month over month, CPI month over month, year over year CPI. The forecast actually did print. We're expecting 2.3 unemployment claims at 229. So this is actually nice to see what the expectations are for next week. We will see if inflation falls in line. I've been talking about this all week. My concern with inflation printing next week is that we may be printing this. And so if it prints 2.3, because CPI that we see in the economic calendars are lagging or based on lagging data points, I wonder if we're seeing this instead of more of the real-time inflation, which has bounced. I mean, this is trueflation. It's different. The lows around 1.5, but we're sitting up around 1.96. I mean, let's just say for a second, hypothetically, that we have a 2.3 next week on CPI. Okay. But if this goes from 1.5 to 1.9, does that mean that as we come into November, December, that we get back to 2.7? I don't know. How do you think the market would react to something like that? Probably not too good. The market might find a way to ignore it. I have no idea. But I would think that the Fed itself would not love to see that. They've been kind of taking that light victory lap, thinking that we went from low threes to then breaking threes, 2.9 down to 2.5, now down forecasted to 2.3. Are we going to get to 2%? Are we going to be sub 2%? I don't think that we will be. So I'm just wondering if what we see next Thursday is going to be the low point for the CPI news, and we won't see it again until November. So, but we do have CPI news. We also have core PCE. We have PPI news. So we have a little bit more inflation points to get through for the month of October. But the CPI will be the big one next week. We also kick off earnings season. Let me see if I can find earnings whispers. calendar. I think I took a screenshot of this earlier, right here. So here's next week earnings whispers, most anticipated earnings release. Let me see if I can just find that. Most anticipated earnings release. Earnings calendar from Invesco. Huh. There's actually some YouTube videos on that. That's cool. Let me see if this will actually give me a picture on earningswhisper.com. Man, nobody wants your cookies, Earnings Whisper. All right, never mind. So here it is. PepsiCo on Tuesday. I'm just putting out some notables here. I'm interested. I have these circled. We have all the financials coming in. Not all the financials, but a lot of the financials kick things off on Friday. JP Morgan Chase, Wells Fargo, BlackRock. That is Bank of New York. And what is that one? BSVN. Financials Friday, which I probably won't be trading, but I'm curious enough to maybe put on a trade of Domino's and Delta. We will see. I also have a watch list I wanted to review today. Francois, what's happening? Meta going to see 600, maybe. I mean, I wouldn't mind looking at an earnings play on Meta. Oh, this is why we don't call the highs. Meta is up. Why? Usually rise in October. Well, there you go. Uptober, so they say. Target up from 660 from 600. We're at 593. I mean, 600's in the cards. I mean, I'm not buying it at the highs, that's for sure. Puts, credit spreads. I've got what is this one? A 111. I did a 450 by 445 bear put with a $400 sell, $1.80 credit, willing to own. I wouldn't mind taking some shares, but we'd have to have a nasty spill on Meta for that to be the case. It's probably not going to happen, so likely going to generate some income there. I do have a list that I wanted to review. I'll just kind of go through at a glance today. Let me take a quick peek. ASHR. So this one is popping over bought right now. We ripped up here from $23 to $32, $33. This is a China play. Alibaba, which we know some of the China stocks have been still in the green today. Hang Seng up 2.82, Bob up 1.48, Baidu up 0.88, FXI 3%, KWeb 2.53, JD up 3.98. I did take a position off today at the highs on JD. I bought the shares at 32.50. I had some diagonal spreads in here when this thing ripped to the upside. I was long around, I think I bought like an $18 call and I got out at $30. So it was a $12 credit. I think I paid like $3 or $4 for the debit. So it was a nice little $8 to $9 profit. And I think I did that on 10 contracts. So that paid pretty well back here on JD. And then I just put in a bunch of naked puts. I've got some credit spreads, bought some shares in this breakout at 32.50. I know there's still upside. I'm looking at this to possibly get to $60. But I'd like to see a pullback first. And so since I was long and it was uncovered, it was easy to just take some profit. And so I'm going to take some profit. When it comes to Alibaba and Baidu, I still like these stocks as well. Measured moves have not necessarily been hit yet. So I'm looking to see if there's a bit more upside on both. Baidu to me has potentially the most distance to travel. But this could also be taken at sweet time with some type of head and shoulders pattern, something like this, and we'd have to have a higher high. So this one might take some time. We'll find out. MSTR, I like MSTR. That's essentially saying I like Bitcoin. So we're at 174.90 up today. Not sure if there's any news or what's Bitcoin up today. Bitcoin's back up to 61K. Is that right? Yeah. So down to about 59.8, up to about 62 today. Not a bad little turnaround on old Bitcoin. Not above recent highs, not at recent lows. Still, to me, an accumulation zone that I'm watching closely. See if I can find some other stocks in here. What else? We have BEKE. We have BHP. Let's see what BHP is. BHP is also up, showing some strength. What do we have here? Non-energy metals. This is a steel play. Let me take a look at this one. So BHP. Dividend not well covered. Profit margins lower. Still forecast to grow. Trading below estimated value. Let's take a look at price to earnings, price to sales. Not super high, which is good. Current price 44.58. Fair value 56. This is a non-US. So I saw that was priced in Aussie. So that was odd. So commodities, I'm assuming. What do they do here? Oops, no. Australia, Europe, China, Japan, India, South Korea, rest of Asia. Company operates through copper, iron ore, coal segments, mining of copper, uranium, gold, zinc, lead. So they're a miner. I don't like the miner plays. I like spot. So if I can, I mean, I'm long copper. I'm long. I have some shares of CLF, so I guess technically I'm long aluminum and long steel. I'm long gold. I'm long silver. I'm staying out of the miner space a little bit. Baidu, this one popped up for some overbought conditions. If we pull back a little bit, that's totally fine. Still looking for bull flags. BILI, somebody brought that up yesterday, I believe. And this is another play out of China. I don't have any exposure on this one. I'd mentioned if this is a double bottom and we're going to double this move, profit up into the 40s looks pretty clean. So that one popped up on my list. BTU, Peabody Energy. See if we can find some. If we revisit support in the 20s, this isn't too bad if it checks some boxes on BTU. Earnings are forecast to decline at an average of 8% for the next 3 years. Don't love that. Profit margins lower than last year. Don't love that. Still a value play. Has some upside potential. I would just trade. I'd look at a range on this one. I'm not interested really at current prices, but do we come back down into the, I guess, the low 20s, maybe? If this is getting some pop from oil, which has been up quite a bit the last week or so, maybe there's some upside here, but I'm just looking for a range. So I'll pass on that one for right now. CNX, just pulling from a watch list with some scans that I ran this week. CNX, this is way up there. Holy shnikes, integrated oil. I'm not chasing things at the highs, that's for sure. EDU, this is a China play. Yep, not interested in that one. EWH, that's Hong Kong. I'm not chasing. I'm good on China stuff. I'm not chasing any more China stuff other than what I have. FUTU, is this China as well? Provision digitalized financial services, offer securities. Oh yeah, Hong Kong. Okay, got a lot of China stuff on here. FXI, we know. HTHT, JD, KWeb, LVS. Come on, LVS. Give me something good. Well, I had some trades in LVS. Fudge. So I have a pending buy. It's a credit spread 35 by 32.50 on LVS, but I need price to come back down to me. This will be one that I've traded LVS and WYNN for a while. Basically, when it gets down to kind of COVID levels or 2008 levels, I buy it. Either buy the shares or do a handful of option strategies. We just didn't come down to this cluster support we had back in 2022. So it's already gone from 38 to 52. That's a pretty big pop to the upside, but I'll see if it comes back down to the levels that I want. That was LVS. More China. Rio Tinto. Let's go to Rio Tinto. This is a little commodity play. There's some good wedge action on this one. I would like to see if Rio Tinto can narrow a little bit more. I'm wondering, I don't know, let's see if we can do something pre-earnings. What's the IV on this one? If we get back to the center, I'm going to set a chart alarm here on Rio Tinto. If we get back to the center, I'm going to look at a strangler and iron condor on Rio. So let me see if this will get back into the center price around $67 and see if I can do something in and around earnings. Let's see when it has earnings. Earnings are out to, wow, they're way out there. So February of 2025. All right. Well, if we get back to 65, that's right back in the middle of all this stuff. So maybe a nice little strangle. 82.4. That's pretty decent. Could I get a ratio spread? Could I check some boxes here on Rio? Let me check out the snowflake analysis here. Rio Tinto. Let's go with the ADR. So I don't like that the earnings forecast to decline by, but up, 0.3%. Okay, but what's their current dividends? Not well covered. Good company value below estimated value. So there's not a ton of upside in this one. Price to earnings, price to sales, pretty decent. Discounted cash flow, expecting it to be an $80 stock. We're trading at 69.65. I would hope for a pullback here. Maybe something in the 60s. Let me see what this stock looks like if I was going to place a trade. Go back to the table here. Any future trades in the last hour you're looking at? I'm not looking at anything in the last hour. I'm not scalping on futures. No, I did put a trade in on ES though for a hedge next week. I did put in, if I go to ES, I put in a broken wing butterfly in the money call fly, which all that means is I'm looking for price to do this. If price turns back down at all next week, that is, so this is price. If price falls, it gets into my profit trap in my, oops, I guess I'll do this. If price falls, profit trap, and then my tail credit. So this is my trade. So if price falls at all next week, I have potential profit here for peak. I have potential profit in here for credit, and then I can keep all that if we actually fall lower. So I put that expiration out for next Friday, but I'm not doing anything right now on ES. Not for the last, hour of trading. I'm not that interested in scalping late in the day. If I'm trading futures, I'm trading in the mornings. I'm usually looking in that 9 to noon window if I'm trading anything futures. Contemplating a put if Meta gets near 600. Fine, just make it inexpensive. I wouldn't mind doing like an in the money bear call spread. So you can define the risk and collect like 60 cents on the dollar, 70 cents on the dollar, not take a lot of risk if you're wrong, rather than paying for a put, which the premium is going to be expensive. Depends on your timeline here, but if I put in Meta and I want to build something out, let's say you want to see some election drama, so you go out to the 8th of November. You want to get something around the earnings, right? Earnings is October 30th. So you want to do something pre-earnings. The catalyst to drive Meta's higher or lower is going to be probably earnings. So November 1st coming into the election, November 8th is after the election plus earnings. Puts are expensive, man. If you buy, a 600 plus, I don't know what you expect movement wise, but that's a fairly pricey put where you're going to have to cover a lot of ground. So I'd be, I don't know. I'd be more inclined to do like an in the money credit spread so I can get more premium, risk way less capital. If I'm wrong, but have it be very, very tight risk. Let's see. All right. So anyway, Rio Tinto, let me take a look at that one. Could that hedge you did be done in the SPY? Yeah, of course. So on the SPY, it could be done in the SPY. I'd be looking for a call fly probably around the 565 zone or the 562 zone. So if I did the call fly, it's a broken wing, so like it's like a skip strike. And if I did it out to Friday the 11th, what are the two levels I said? 5. So basically, if we get below 565, which that's a decent price next week, we'd have to drop $5 or $6 to get there. But if we do get there, it's going to be a low risk trade. Let's say we get to 565 next week. So if I put in a call fly and I sell the 565 and I put this as my line in the sand. Now, this one is dirt cheap, but we've got to nail that price by expiration to get any type of payment on that one. So what I tend to do is I look to go out and take a trade like this. I'd risk $28 to make $72 per contract, and all I need price to do is go down, okay, below 565 or 564, and I can keep that tail credit. So this trade looked like this. Here's current price. If price falls, I have my profit trap at 565, and then I have my credit. If price falls down here on my option chain, it falls below 565, then this is 565. This is 564. Anything below that is still profit. So my risk is in here. My risk is right here. So yeah, you can trade that. And so it'd be 72 cents on the dollar, 74 cents on the dollar. So your credit is 74 cents, your risk is 26 cents. It's not a bad trade. So it's a very inexpensive hedge. Yeah, I don't think that's a bad trade at all. So my ES trade is I think I'm risking about $70 to make $175 on the overall credit, and if I get a profit trap, it's like 425 bucks. So yeah, but the SPY definitely works. Okay, and again, I don't know if it's going down. I'm just wondering. I mean, are we going higher? Is this market stoked about inflation? No. Is it stoked about jobs? Maybe. Do we have enough earnings catalyst next week with financials? We're just getting started. I don't know if it's enough to drive the market higher, but it might be a perfect week next week to do nothing. Maybe next week is a perfectly boring week, and if we just kind of hang out here at these highs, that's okay too, because that could be a fantastic week for a little daily profit play where every single day we're just grabbing some premium and making some cash. I'm just noting this level, like if we break this low, that FOMC gap is right there, and I think price will find a way to hit it. If we break below FOMC, then it's a little bit more open, as price would likely be coming into some supported trend lines or some structure, and that's this type of stuff, right? So if we break below FOMC, we've got the 50 period sitting right there. So a close below, close above, that could be the buy the dip opportunity. Between the 50 and 100, I would say I love this area. If we come down to the 50 and the 100, I really like that area for a chance to buy the dip. Doesn't mean I'm calling the bottom there, but I would probably take some stabs at it. Okay. Um, do I trade coffee? I mean, it's futures a little bit, not a ton. What's the futures ticker for coffee? KC. Yep. Um, I mean, coffee's not bad. I mean, this is a really strong looking trend. We've had a trend in coffee since May. Yeah, not a bad spot. Something like that. Looking for coffee to go higher. So I mean, coffee looks pretty darn healthy if you ask me. I appreciate bringing it up because now that I see it, I wouldn't mind going out. Maybe a 50. Yeah, let me see if I get something on coffee here. So let's go to. Ugh, tasty. Come on, guys. No, I don't want to trade Java. All right. Well, I don't have a coffee feed for Tasty. That sucks. I mean I like it. I like the trade. I mean, if I could trade it, I wouldn't trade like just the futures contract. I would probably look at a defined risk, like sell a put, buy a put, and then see if it goes higher, or sell a put, buy a put, see if it goes higher, and probably go out 45 to 60 days. I think that's enough time to get this thing to pay for profit. Grab 25 to 50% profit. So, if I could trade it, I would be looking at that trade. Yeah, it's not bad. That's a healthy trend, man. I like it. Archie's asking for Discord. Sure. Let me post the link. Let me share my Discord and my Telegram. So I've got a Chris Pulver Trading Telegram, Chris Pulver Trading Discord. So here's an invite to both. So here's Chris Pulver Trading Discord. There you go. And then Chris Pulver Trading for Telegram. There you go. Okay, Mike says heading to Ferris tomorrow. What are you watching? Didn't their football team score like 84 points last week? Something ridiculous like that. Go to Khaki for me. Say what's up. Tell me how Big Rapids is doing. Nice. All right. So yeah, that's coffee. I wish I could trade it because I like it. I'm not YouTube in the morning. No, not anymore. I'm doing I'm doing trading sessions in the morning. So I'm live at 9 a.m. for a daily profit play, live at 10:15 with A1 trading, doing some pulver alerts, and then doing a final hour live every day. So, I'm still doing content. I'm still in the market a lot every single day, obviously. But yeah, my morning sessions, I'm doing live trading sessions instead. So Yeah, so that, I mean, all that stuff is in my Discord as well. If you're interested, I've got a little daily profit play live session every day from 9 a.m. to 10 or so. And then I joined the A1 trading team at 10:15 to talk shop, do some trades, post some pulver alerts, all that good stuff. All right. Anything else on the watch list side? Yum China's way up. Oh, that's another one I could probably take some profit on. I think I'm done with this one. Yep. So maybe a pullback here. I actually liked this one. This is Yum C. And I do want to look at Rio before I move on, but here's Yum C. So looks good fundamentally. Price to earnings, price to sales, not too bad. We're right at current price though. It's solid, so I don't really have a bunch of upside. But what I do have is I think I took profit on these. I had a bunch of puts and they were worth like 90% profit, so I went ahead and just protected it. So that was pretty easy. So overall, trying to take away some of this China profit, let it run for maybe another 30 to 60 days. I don't really want to hold China stuff past the end of the year. I think by the time we roll into December, January, I'm ready to be officially done and, take what I can get. If the percentages are just outrageous, that's awesome. But I'm not really long term on the China stuff. It was really just a good technical setup. We're getting this crazy squeeze. The fiscal stimulus that's come in, the government spending, the support, I'll take it. It's been a long time that I've been waiting for it, but it finally is paying out nicely. So the SPY hedge, yeah, I just looked at that SPY price. It was the right here. So if I took that trade, it'd be selling the 565 call and then buying the 574 call and then buying the 567. So it's a butterfly spread. So you have to have two in the middle at 565. So that's a sell at 565 for two contracts. Buy the 564, buy the 567. That creates an uneven butterfly spread, which gives you a credit. So credits is 74 cents for a risk of 26 cents. To me, that's a fair hedge. If price gets down there or falls lower than 564, that's full profit. We also give ourselves a little lottery pick for that pin at 565 expiration. So a little bit of gravy on top if you can see that happening by Friday next week. But it's pretty cost-effective hedge. Okay. Daughter on the golf team, PGM program. There you go. Yep, I remember those days. That's awesome. Yeah, it's been a long time. I haven't seen the new facility there. The new Michigan PGA Hall of Fame, the indoor facility. I haven't seen any of that. It's been, well, I don't know. I think the last time I was at Ferris was maybe 2008, 2009. It would have been maybe an alumni tournament after grad school. So it's been a minute, but that's awesome. And one of my best friends was the golf coach there for 9 years. So I'm trying to think who's the coach now. I think the guy that's the director of the PGM program I went to school with, Joe Hatch, is the PGM director. Golf coach, I don't know who it was or who it is now. Anyway, little trip down memory lane. Gold, yeah, all good, Dave. Yeah, I mean gold's bullish, man. I mean, I'm not buying highs. I'm waiting for a pullback. I hope we get something. I mean, I'd like to see the market, kind of shake things up a little bit just by some dips. I mean, let's give a little something, right? Give a little correction. This would probably be my favorite trade over the next 30 to 45 days. If we have a dip to find any of these, and literally this is the easiest outlook I could have on everything. If you're in an uptrend, okay, if we get a test of the 50 period or a test of the 100 period, I'm looking to buy some dips. Could be on the SPY, could be on the NASDAQ, could be on the Dow, could be on the Russell. Like that's easy for US markets. Right here, same thing. If the Qs come down, tap the 50 or the 100, I'm going to put in some credit spreads. If the Dow comes down and test the 50, the 100, I'm putting in some credit spreads. Russell, same thing. Put in some credit spreads. Gold and silver. Here's oil. Okay. Oil has ripped, but we are actually still on the daily time frame below the 200. So I don't think oil is necessarily just full on bullish. I'm not that bullish on oil. If it obviously keeps going higher and we get a bull flag or something, I mean, that's a lot. Like oils would have to get back into $80 or so to be like, well, that's quite the range because it's support down here, it's resistance up above. So oil could very easily have this week as a squeeze, and then another reality check with Saudi Arabia trying to push prices lower, flood the market with more supply. But obviously, if oil fields and supply is disrupted in the Middle East, I mean, 1/3 of the world oil comes from the Middle East. So if that's disrupted, it would make sense that supply chain is disrupted, and therefore oil prices go higher. So it was surprising that all this was happening as oil was going lower, but here we are, making that pop. So anyway, gold looks different. It looks just like the indexes. Okay, look at gold. All I want is a pullback. So at these highs, I mean, it's hard to say we should sell gold here. I'm not interested in selling gold. I'm long on GLD, I'm long GC. What I'm looking for is a way to add to those core positions. I want to see if gold will just do this. Just don't do anything crazy bullish, but just fall back a little bit. Give us like a controlled pullback, and then we can start resuming the upside. I just want to see if these will catch up. I mean, if this just goes sideways the whole time and this catches up, okay, maybe a little fake out and then I still buy the dip. But give me something technically that just is not buying the highs. Now, if it goes higher, I can take it higher because I'm already in the trade, but I'm not buying highs. Sam Stark, yeah. Sam played for my buddy. Mike Mignano was my buddy. He was the golf coach for 9 years. So Sam actually played for Mike. Yep, but yeah, Joe Hatch was in. Um, he was a couple years behind me at school. All right, so that's what I think of gold there, Dave. I mean, I'd like to see a pullback, get a 50 period. I mean, the more aggressive one would be the 21, but you can see here that the 21 gets hit, 21 and 50 are kind of hit at the same time. So I'm not super aggressive on like I got to get in at the 21. It's like if we get the 50 period, I'm fine with that. So I'm not showing the 21 period very often. I think the 50, the 100, the 200 are going to be my go-tos. So that's my trade, and I'll just get long with a credit spread. So, well, I'll basically sell a put, buy a put, have a credit spread that's looking to be bullish. That's the trade. It's not complicated. I just want to see if I can add and get some dips. So GC, same thing. 50, 100, 200, give me a dip. Silver, same thing. We actually poked up and made recent highs today. Same thing on silver. If we can just continue to kind of grind and accumulate here, can we find a dip? Bounce off the lows, bounce off the automated trend lines, try to find a trade in here to take it up to my measure move around $36. So I like all of that. There's SI, same thing. Bitcoin, sitting right around the daily cluster. This is all choppy. So the 200 EMA is sideways. The 50 and the 100 are sideways. I mean, I still think this is the shape of Bitcoin right now. It's still a lower high and lower low for right now. But I mean, if we came back up here and stalled, we come back down here into the middle. I'd like to see if we get some Bitcoin back down to lows again and just trade from, even this range would be a good trade. That's a great trade right there. And if we go higher, then there's lots of income opportunities to the upside. A weaker dollar will most likely help Bitcoin. A rally in the stock market again will most likely help Bitcoin. That has not been happening over the last couple of weeks. We kind of peaked out in the S&P and the Nasdaq, and we're just having to be a little bit more patient on Bitcoin. TLT, another good question. I'm out of TLT, and I'm actually kind of happy that I am. So TLT has pulled back a lot. I'm not saying that we can't go higher, but I don't have any interest in getting back into TLT. I was long on this first dip here. When we started to go higher, I was long with an $80 or 80. It was an $80 or $82 call, and my goal was to take it up towards 105. So it was I wanted to get long and just kind of hang on to it for this level, and then once we established this structure, I started to sell calls against my long call as a diagonal, and I was looking at 105 for symmetry. This recent turn right here, the yields have turned up. So I don't think that the yield situation, the bond pricing is not going according to what everyone thought. Fed's going to cut rates, bond prices are going up because yield prices are coming down. It has not been that clean. Take a look at our yields here. Look at the 3-month, okay? Now I know this is not like, oh my gosh, crazy bullish, because it's certainly not. But we are at least stopping the bleeding down here at 4.6 on the 3 month. The 2 year has made a pretty good rip. I mean, this is up 40 basis points or so in the last 2 to 3 days. So there's clearly something going on here, and I think the market is not necessarily looking at the Fed being as dovish going into 2025. But I do think the Fed will still cut rates this year. Probably cut another 25 in November and another 25 in December, but maybe way less dovish in 2025. And the market might struggle with this, after January, February, maybe Q1. We don't know. Okay. All right. So 2 year is up, 10 year is up. I mean, we're off the lows here by another 37 basis points. The 20 year up 33 basis points, the 30 year up around 30 basis points. And so, I mean, even the 30-year mortgage has gone up, not by a lot, but 6.08 is now 6.12. So what happens if the Fed cuts again? Well, hopefully it reflects that, but they cut by 50 basis points when this thing was trading at 6.09 or 6.12, 6.15. So, why aren't we getting a 50 basis points cut in the 30-year mortgage? I don't know. It's not happening yet. So this rate cut situation is going to be a pretty delicate story moving forward. I would love to see lower rates, but I don't think that lower rates are going to be the best solution for an anti-inflation campaign. I mean, the the biggest scare that our economy should have right now is, I mean, labor wise seems to be steady and stabilizing. But if we get another wave of inflation, so we peaked at 9, we came down to 3 and 2, right? 2.5 right now. If this starts to go back up again, I don't know what the Fed is going to try to do to prevent this from going back up. Because I need to find this chart. It was a podcast I listened to a couple weeks ago, and basically inflation waves look like this, like that. And here's where we are now, right? So does that mean we're automatically going up? I mean, I think the Fed is smart enough to know like they can't, nor should they let any inflation resurface. Because if they do that, it's not going to be good. And this whole soft landing is completely at risk if inflation starts to go up. Because we might run a hot economy, but if inflation starts getting back to 3%, plus 3%, 3.25, 3.5, 3, I mean, it's not that far away from just being an uptrend. All of a sudden, it's 3.5 and 4. I mean, you want to put fiscal spending in there, it's going to be inflationary. You want to put tariffs on the economy, it's going to be inflationary. If people are making more money, it's going to be inflationary. So you want to have a longshoreman protest and union protest or a strike, it's going to be inflationary. So I know the Fed is aware of this. I just wonder how this translates into what 2025 looks like with how dovish the market thinks they're going to be. Because if they're not as dovish, it's the same crap we dealt with this year. If the Fed is navigating this landing, but man, they might wreak a lot of emotions in the market, and the sentiment might be some nasty swings. So anyway, crazy. My bearish on the dollar right now, no. Right now, no. I mean, I've been actually bullish on the dollar for the last couple of weeks, waiting for a move like this to happen. I didn't participate in anything that was currency related other than dollar Swiss. That's a long position that I have. I am looking for the dollar to return to some type of bearish direction only if the markets go up, the dollar gets weaker. Okay. It would be an odd event to see the dollar get stronger and stay stronger and the stock market still go to all-time highs. It can happen, but it's usually not the correlation that we see. So for, gold to have a nice run, for silver to have a nice run, continue to run, I'd like to see the dollar get weaker. So all I'm looking for is structure-wise right in the middle around 103.50 or so. If the dollar turns around that 103.50 or has one more poke up here, I'm looking for some type of trade that way. Now, I don't know if the dollar is going to trend lower. I mean, this swing, and if all this is corrective, I mean, look, the dollar might just survive in here for a while, and this is what the deal is. Like, there's no real trend other than you sell high and you buy low, and you sell high and you buy low, and you grind out the dollar as long as you can. But if there's any type of pressure on this swing right here, then I'd like to see if that at some point actually breaks out to be the measured move. And that puts the dollar, back below like 95 or 94. But that's a medium to long term trend, and that's going to be a very weak dollar. I would imagine that I don't know. I think Trump would probably be weaker for the dollar than Harris would be. Honestly, if I had to pick, I'd rather take Walz and Vance as the two primary candidates because their debate was way more intelligent sounding and articulate than the other two. So I don't know. I'd like to see the face of politics change in a big way. It's the most exhausting thing ever since 2020. Since 2016, politics have been exhausting. So I could honestly care less, but it just seems like our country's in such an emotional state with like it's highly, highly sensitive and it's highly volatile and it feels like crap. And it feels like you got to be this way, you got to be this way. There's no bipartisan, there's no middle ground, there's no compromise, there's no common sense. So I hate it. And we also operate on 2 to 4 year cycles, which means we don't get anything done because the last administration was the worst. We're the best. We're going to fix it all. We're going to, repeal it or appeal it. It's all it is. It's smoke and mirrors, if you ask me. So, not that I can solve it, but it's still just super frustrating. Okay. All right. Anyway, I'm looking for the dollar. If we hit like 103 to 103.50, I will be looking for the dollar. Let me turn these off for a second. If we hit the 103 to 103.50 zone, there's a couple things that might play out in the dollar. This is a really nice level back here of structure that I could see the dollar, coming up here, stalling, pulling back, and then maybe going up one more time. But if that starts to get faded right around this 103 to 103.50 handle, I really like this as resistance, and then look to see if the dollar will turn off of that. So if I was able to sell the dollar, let's say up in this area, sell the dollar up here, take it back down to these lows, if I'm able to get a decent entry and get some profits in, lock it in, break even or better, and then, if it breaks lower, trap your profit. If it breaks and goes lower, trap your profit. So I think that 103 to 104 area is where I'm looking for confirmation to sell. I don't want to call the top on the dollar. I'm just looking to see if we have a good, clean sell area between that 103 and 104 zone. Okay. So, and that to me takes care of the dollar. I have zero interest in the Japanese yen. It is either the strongest or weakest currency pair. It drives me absolutely crazy. I've said this on a lot of these swings we saw from that July to August move, that July to August 5th move, is if we have this move and we go 1, 2, 3, that could be a really nice harmonic pattern. And there could be opportunities to sell the Japanese yen again, meaning, looking at some yen strength. But probably my least favorite currency pair because it is the one that doesn't really behave. So, if you're going to trade the yen crosses, do have a plan with a stop loss. Don't trade super large. Don't scale into the yen pairs without having a plan of risk. Like they're very tricky to trade. And if I look at the Nikkei, let me go to the Nikkei 225. So, Japanese yen, this is the futures market for this. This is the 6J. This is the Japanese yen futures. This has dropped in a big way. Looking at the Nikkei, this thing hasn't gone anywhere. What the heck? So we got the Japanese yen getting weaker. The Nikkei is going nowhere. I guess just be prepared for more of this. Maybe some of that. Maybe. Maybe more of this, like sideways. I don't know. So if we're not breaking highs and lows, be prepared for some chop. Same thing in the US. If we're not breaking highs or lows, be prepared for some chop. Okay. All right. Any currency pairs anybody's looking at or liking right now? I mean, my Aussie CAD, New Zealand CAD just keep crushing it with robot stuff. I don't really have to trade those much. Aussie Swiss, I'm still long. Aussie yen, I'm not in the yen crosses. Aussie New Zealand, I just took profit on. That was last night. Aussie dollar is turning south. That was a nice resistance point to my chart. I posted this in my Discord. A nice little turning point at 69, and it's up about 100 pips. I mean, if we have a bear flag here, maybe not a bad spot. High, low, little pullback here, then a push lower, come right back to the midpoint. Maybe that's additional dollar strength. Aussie, let's go CAD Swiss. CAD Swiss starting to behave a lot better with oil prices going up. Measured some symmetry here towards 65. CAD Yen heading higher. Same thing here. We have our big swing. Low to high, higher low to higher high. Could be a nice harmonic pattern. Watching for that area to be a sell trade, but trade with caution and trade with confirmation. Swiss Yen. This trade, I'm upside down just a little bit on that swing. I'll keep an eye on that one. Euro Aussie, maybe not a bad trade to look to buy. I took a sell trade on this one for profit. That's probably not a bad spot to look for some support. Euro CAD, had a trade in here. That was a small, I think I took a small loss there. Yeah, I took a small loss on that chop. I was looking to sell. Yeah, I mean, CAD Swiss going up, Euro CAD going down, oil prices going up. This is probably a sell trade. Pound CAD, Euro CAD. I'd look to sell those. Euro Swiss, I'm bullish. Trying to get back to previous highs, low to high. A little bit of consolidation here. Just let it chop around. But if we break above this, see if the Euro Swiss can get back to these highs around parity again, 1.00. Euro Pound, not that interested in. Yeah, I'm not that interested. This thing, oh my gosh, it did come down to that support level. Son of a gun. I haven't been paying attention to this one. I wanted to take some buy trades around 8,300. So it didn't activate the alert or else I'd be in the trade. But yeah, I'm watching the 8,300 level. Euro Yen, same thing. Watch for that measured move, low high. It's a little deeper on the pullback. So if we go low to high, higher low to higher high, maybe some symmetry there with a harmonic pattern. Euro New Zealand's probably similar to the Euro Aussie, right in the same support zone around 7,500. Euro dollar, watch the dollar index. It's turned pretty steep here around the 112 handle. I don't know. Watch the dollar. That's the easiest way to trade the euro right now. Pound crosses. Pound Aussie, I'm looking to buy this thing if we come back to like 89 or 89.50. Pound CAD, I'm looking for sell trades. We still haven't made lower lows though. I'd like to see maybe a swing trade on the pound CAD, something like that. Okay, pound Swiss. I'm still bullish on pound Swiss. Pound yen, very little interest in trading it, but we'll probably still just see it fudge around with the Japanese yen. Pound New Zealand, good structure here at 2.1. I'm not in the trade. I like this trade for something like this. There's a low, there's a high. See if it's range bound. Maybe a chance to sell this thing around 2.15 or so. Pound dollar. Nothing on that one right now. New Zealand CAD, that's robot city for me on New Zealand CAD. I'm holding a core position that's long as well. New Zealand Swiss, still holding this one long. New Zealand yen, looking to push up a little bit higher in that retracement. New Zealand dollar has peeled off. I mean, just good structure here. We sold off right at the top at 63.70, and it's still in a big range. I mean, you can see this resistance, support. If we're high, low, lower high, lower low, we might trend all the way back down to these lows again, but I would buy New Zealand dollar down here, just trade the range from 59 all the way back to 64 or so. There's I don't know. That it's a range trade for me right now. I don't think it's in an uptrend. I mean, it's been an uptrend, but I've been looking at this thing to turn south. If you look left on the chart here, there's a lot of structure back here that goes back to 2016. I think this uptrend is kind of getting exhausted. So I'm looking to see if this will just turn and just break down and then just be a range. There's a lot of clustering in here. So I'm looking for a high to form on the pound CAD. That's what I'm looking for turns. All right, New Zealand Swiss, New Zealand dollar. We did dollar CAD. Dollar CAD at 35. I would buy the dollar CAD at 31 to 3,200. I'd buy it like at those lows, and I would sell it at the highs around 39 to 1.40 in the middle. No interest. Dollar Swiss still long, looking better. Finally broke out of this cluster we had since August. So I'm still long in the dollar Swiss. Even if we get back to these range highs, that's okay. Something like that is good. And then dollar yen, who cares? It's nonsense. But what is it doing? It's pulling back into levels that I drawn. This is a 382. This is a 50. This is a 618. I'm not calling the top here, but if we start to see that this is turning or turning or turning, looking for an opportunity to maybe get some alignments to sell and see if this is just a big old swing trade, right? If we go from this big high to low, and price just pulls back and then starts to find a lower high, well, maybe we'll come back down and test the lows again. Maybe we push down to symmetry. So I think there's a good trade, but obviously the Japanese yen, it's like trade it with risk. Stop loss above here, stop loss above here. But if it turns south, there's still room to get back to 140 or lower. I just trust the yen very little. Okay. All right. Can zero DT trade right up to the bell? I mean, if you're greedy as hell, man, what are you trying to do, Mark? You trying to grab some premium in 9 minutes? Yeah, I don't know, man. Just be careful. I mean, you can, but you got, I mean, just be the last like 15 minutes of trading. Sometimes you get some really stupid, like, I mean, I've seen the SPX move 15, 20, 30 points in the last 20 minutes. If you're trying to sell premium, unless you're going like bull put only or bear call only, just be careful. That's all. I mean, it's nice, but your credits are going to reflect next to nothing. You're going to take a ton of risk on those trades too. Yeah, but you can. I mean, you can, and plus a cash settled instrument, you can take the trade, get your credit, and let it cash settle, which is always pretty nice. So there's no SPY, there's no QQQ. Like trade the cash settled. That's why I trade ES quite a bit. That's why I trade SPX NDX quite a bit. Cash settled. Cool. Yep. No, I thought you were getting crazy on me. Like, I'm trading this. I want 8 minutes. What are we going to do in 8 minutes? Give me a trade. Not doing it. Okay. Um, Anything else? I just went through 28 pairs of currencies. We did gold, oil, silver, did Bitcoin. I like MicroStrategy. I took a trade today on WBA for a couple of my accounts, just a little income trade for a couple of weeks. We're trading at 870. I need it to stay above $8. If it stays above $8, I'll make 330 or 350 bucks. If it goes below that, my break even 765, so I can still work it for repair, which is okay. But we'll see if this thing has a squeeze to the upside towards like $9 or $10. Hopefully it does. All right. And then the rest is just, it really is just waiting. I mean, I think my plan over the next couple weeks. So I said that broken wing butterfly down here on ES, and I will just look at some daily profit plays all week. We'll take it one day at a time. Directionally, I mean, if we're going to have 1 week of indecision, let's just look at this. So 1 week of indecision, 2 weeks of indecision. This one was a little sloppy, but we had the FOMC, which gave us all the noise in 2 days. Otherwise, it was indecision Monday, Tuesday, indecision on Friday, indecision on Thursday, actually. So that was literally one day of disruption. The rest is like just freaking chop. So we could still operate in this chop zone for a while. Next week, we just start to kick off earnings season. So I don't have a lot of trades for next week. I will look at Delta and Domino's. I'll price them out, see if they look good for an earnings play. I'll probably end up going out to the not the 11th, but the following week, and just I'll see what they price out to be. So I mean, Domino's is an expensive stock; it's $400 or so. So it depends on what the spreads are like, if they're wide or not. Delta is not something I want to own at current prices, but I don't mind taking. I mean, Delta can have an opportunity for like a big miss or a big whiff. I'm not sure. I would imagine that. I mean, you never know with airlines. I mean, if you go to the airport, they're always freaking busy. Flights are always oversold. There's no pilot strike to my knowledge right now. So, I mean, people seem to be traveling this summer, and maybe that's what their reflection is the report they're going to have next week is at Q3 earnings. If we had a lot of summer travel, then Delta probably had a good quarter. Um, but as far as the expectations, I mean, we're at a $49 stock, and we're going to have dollar spreads, so it's maybe liquid enough to take the trade. We have 50-cent spread, so it's decent. I could get some work done there. If I and I'm just going to say hypothetically, we're trading at 49.20. If I buy the 49.50 and I buy the 49, I mean, the expected move is 353 with earnings. I'm going to price this out because if there's any way that Delta's expected move is going to be $5 or $6, I'll probably just take a straddle, or in this case, because they're off strikes, I take a strangle, long strangle. But a lot of times, what I'm discovering is the last 3, 4, 5 months, what you are paying for is all of the expected move. And so that puts me at a disadvantage when it comes to options because I need price to move what it's planned on moving. And sometimes it doesn't. So I would rather, I don't know, I'm just going to assess. Maybe it's better to sell and be a seller of options and collect some of that premium. But I got burned in that with Micron by a day. Micron was actually Monday; it was in profit, but Friday when it expired, it was not in profit. So I might be willing to go out a little bit further. Had I gone out to this week's expiration on Micron, it should have been full profit. Yep, freaking A, man. Micron, you turd. So I sold this thing at like 96 was my center price. Yeah, 96 and 95. I needed to stay below 106 for full profit. I was 1 day off on that. I'm a little bummed about that, but whatever. I mean, I took in 650 of credit. I risked 350. It's a trade, but um, next time I'll just be a little more conscious of the expiration and go out. That was like a 3-day expiration when I should have probably given it the week, but that's on me. Okay, Francois, appreciate that comment. Anybody on the fence for the daily profit play jump? There you go. I know. I mean, I know it's a good class. It's a fun trade. It's a fun trade. It's good income. It's super consistent. It takes all of 20 to 30 minutes in the mornings. It's super easy. So yeah, it's a great service, and we got a lot of happy traders. So I like it. Very good. All right, everybody. We're just a few minutes away from closing bell. I think I'm going to wrap it up early. It's been a week. It's been a great week. Overall, pretty solid. Like to see that the markets are up today. P&L, pretty decent day, up 25 grand in the day. Portfolios climbing as I want. Waiting for my opportunities to hopefully add some positions. Looking at that 50-100 combo for moving averages, getting some credit spreads in, generating some income. I'm going to be watching the China stuff pretty carefully because I'm not opposed to taking profit over the next 30 days, 60 days, 90 days. If we go up another, who knows, another 20, 30, 40%, I'm probably just going to start taking some profit. Or at the very least, moving some stop losses. I can obviously just stay out of the way, and maybe this becomes like the most ridiculous run ever. But I think we're going to have a pause or pullback sooner than later. We'll get through the inflation situation next week in the U.S. for Thursday. We have some earnings coming in. It's a pretty light economic calendar outside of earnings season starting, and then inflation on Thursday. Other than that, it's a pretty light calendar. So without any crazy surprises, we might just have a choppy week, but you never know. I don't plan on choppy weeks. I don't plan on anything. I just trade what I see. So, all right, cool. Everybody, you have a great Friday and a great weekend. And thanks for being with me all this week in the final hour. Hopefully, you're starting to get acquainted with the schedule. Daily profit play in the mornings at 9 a.m., A1 trading at 10:15. Sprinkling a couple webinars here and there, and then my 3 p.m. YouTube session. I'm pushing this out on Facebook, YouTube, LinkedIn, Twitter. So yeah, the final hour session to recap for the day, and that's it. So happy Friday. Have a great weekend. I'll see you back here on Monday. All right. Thanks, everybody. Bye-bye.